I want to thank everybody for the warm welcome that you've given us, because today's our first talk at Banking 50 as new members. And it's really assuring as we walk around and we see the audience that probably 90% of the companies represented here and on some of the slides are already our customers. So that's a really good step forward we've made. We've got a little trick up in embedded finance, but this is a new space for us. The aim of today is really just to introduce ourselves and let you know what we do, with an aim to having further talks throughout the year on DORA regulations, things like that. So I think if we move to the next slide. Look at those photos. My life started out as NCC Group. I think I was born at this company. We'll refer to NCC Group, but we've just been rebranded to Escode NCC Group from NCC Group Software Resilience, big corporate rebranding. So I don't know if anybody actually knows or heard of NCC Group. We are partly a cyber firm. We acquired Fox IT a few years ago, and the other side is a software escrow company. We recently acquired Iron Mountain's escrow business out in North America as well for a couple of $100 million. So we kind of, Dave and I are in the software escrow space. But most of my years at NCC Group, from when I was born here, was looking after financial institutions, mainly working in Switzerland and Germany, here in the Netherlands as well, looking at putting supplier exit arrangements in place for when you're relying on third-party suppliers. From there on in, I've been managing our European base for the last 6 years, sales operations here based just down the road, and growing out through mainland Europe. So really my role today is just to bring you some experience in what we do. We work with you guys as customers, you won't know us. We kind of go under the radar, but we do play quite a strategic part in some of the decisions that have been made.
Thanks, Nick. Yeah, my name's Dave Shepherd, and Willem's already given me quite a nice introduction there, but just to add to it slightly, I first came over to the Netherlands 15 years ago, and I was working predominantly with software developers, software owners. I was delivering escrow solutions from a technical point of view on behalf of banks, but predominantly working with software owners. During those 15 years, I started consulting or working with some of the sales guys, and really fell in love with being able to help shape their escrow policies, what they were looking at from a software escrow point of view. And therefore I moved into sort of a pre-sales role, where I gained even more experience. As a result of that, I now lead the solution architect team for NCC Group, or Escode, sorry. And my team's role is basically to build the technical part of the solution when we're helping our customers work with their software suppliers.
So where does NCC Group Escode sit? We're in a privileged position. We sit between the end user, the software owner, or a bank, a fintech, a service provider, software vendor, however you want to name it. But we sit right in the middle. So working with the banks, what tends to happen is that a bank will be wanting to engage with a third-party software supplier. They've got some critical tech. They might be a little bit small to deal with. The risk might need mitigating, but they've got great tech. How do you step over, or how do you manage that third-party supplier risk so that if the supplier ever fails, the bank can recover and continue, absorb the risk, or be able to take on more risk? So we work with banks all around the world, mitigating third-party dependency. And then on the flip side, we work with organisations like Mambu. Organisations like Mambu come to us and realise that they are new in the marketplace. They do have some great tech. But can they win the core business? And what can they do to ensure that the investment in their technology is safe and secure for that bank, to allow them to bridge the gap, step over, become a customer? So organisations like Mambu come to us because we have the insights of all of the banks, we've got the experience, and we can, being the world leaders, we can actually put in place a solution that says to the bank, hey, we're Mambu, we know that we're in the vertical for the first time. We are trying to grow. We know we might be a bit risky, but you love our tech. We've engaged with NCC Group. The materials that you will need to have access to use, to be able to recover and continue should we default, are in place with NCC, allowing therefore the bank to be able to step over and Mambu and many other software owners to be able to market that to attract more customers. So we sit in that privileged position. We sit right in the middle. So to give you an example of a recent case, just as a case study, we're not going to go too far into what we do in terms of cloud applications and things like that, because that can be a little bit more complex for the first application. We're going to talk through a recent case that we closed, which was with a Dutch bank. It started 3 years ago. We closed it in August. And what happened 3 years ago is that a software owner, software vendor called us. So we're engaging with this bank. It's going to be quite important to us and to them. It's our big win, but they've asked some questions. How can they protect their investment in our technology? How can we assure them that if we default or something happens, we sell the intellectual property, that they are stable, that they can continue, and that they can actually carry on without us being around? The conversations died, I think, and then a year later, the bank actually called us. So what I'm going to present to you now is just the way that we work with a bank and a fintech, or an insurance company and a fintech.
Microphone.
Oh, sorry.
Yeah, so
Is that better?
Yes, better.
Sorry, okay. So what you'll see here is the customer-facing process that we adopt when we speak with an organisation. You'll see each step, the roles and responsibilities and what we're trying to achieve. So at this point, a year before, the software owner of the fintech contacted us. We didn't hear anything, and then a year later, the bank actually called us. We first of all, step one is they realise that they need protection. They've got a key piece of software, and they come to us. And so first of all, what we have to do is to create a stakeholder team on what we do. I think we've heard from Giannis, are we compliant? Are you compliant? Are you legal? So we create their stakeholder team. And that stakeholder team within the bank should be legal, compliance, security, IT product owner, procurement for sure, and anybody else that is going to be on the other end of the software supplier default. What we do is we ask them to confirm what their business objectives are. And that business objective is kind of, what is the application doing? Are you embarking on this relationship? Is it for growth? Is it for operational efficiency? What is it that you're trying to achieve? And in this case, we understood that this particular application was replacing a main core banking system that was in 5 different countries. Typical old banking system that we're all trying to get away from. It's not being maintained, or it's default, and it's old and it's clunky and bumpy, and nobody wants it anymore. So we learned from the bank that this was a core loan, multi-currency banking system, new and shiny. They'd be able to scale up, scale down, and it's going to be implemented in 5 different countries over a period of time. The bank's requirement was they need to be protected from all eventualities. So all eventualities to them was, what are the elements that they can't control engaging with this supplier? Are they going to make their own business decision and it's going to endanger that software supplier? Are we going to go through COVID and they've got masses of loans and nobody's going to the next version, and so therefore revenue isn't going to come in? Sorry. So all eventualities for them was supplier failure, insolvency, supplier going to administration, or even no longer being able to uphold maintenance and support agreement. We then moved on to, they wanted to be able to carry on modifying the application in the absence of that supplier, but they also wanted to carry on having the legal right to carry on using that software, though it's not their intellectual property. Because in the event of going into administration or liquidation, you could be at the mercy of the liquidators or the administrators if you've got nothing in place, Mr. Bank, Mrs. Bank. And of course, with it being a really key piece of software, they've got to adhere to all of the regulations. Once we understood all of that, what their key business requirements are, we then took it to the software supplier. And the whole purpose of this element that we moved to with the fintech, software supplier, software vendor, is to understand what's achievable and what's deliverable to meet the bank's business objectives.
So once we understand what the bank is looking for, the next step is to go and speak to the software vendor to find out A, how they're supplying the service towards the bank, and B, what is possible. There's no point in putting a solution in place if it can't be achieved. What we learned in this particular case study was that the bank were going to host the software themselves. So on the diagram on the right hand side, you can see the bank or the licensee were going to control all of the assets that make up the application or the service. So they were running the application servers, they were running the databases, they were running the connections, the configurations all on site. What that meant was that in the event of vendor failure, they'd already taken care of their own short-term business continuity issue. The software will continue to run. What they needed NCC Group to do was to look after their long-term business continuity, because what they couldn't do in that current situation was make any modifications to the application because they didn't have the source code. Now, any software developer doesn't want to give their source code to the bank, so they use NCC Group as a third party to make sure it's available in the event of their failure. What we also found out is that this particular piece of software was huge. It was comprised of at least 17 different modules, and it was developed by a team all over the world. So as a software owner, they'd grown inorganically, so they'd acquired different technologies along the way. So what that meant is that me and my team had to go into each of those development teams, understand on a high level how are you developing this software and what will be needed for the bank in the event that you're no longer around to support them. What we also found out was that the bank were taking major releases around about once per year, minor releases quarterly or once every 3 months, but the software was under continuous development. So the software development teams were always working on the software. What we did is we went around all of the development teams, working primarily with the project manager and then out to the teams, and we designed and agreed a solution with a software vendor that matched the bank's requirements, hit their business objectives, but was deliverable by the software owner. So we have to have their agreement as well. And that's what we did. So the next step was to walk the solution that we'd agreed with the software vendor through with the bank, with the stakeholder team, as Nick described earlier on. We need to explain what we were going to do and how we were going to do it, and make sure we were meeting their business objectives. And this was the solution that we came up with. As I say, the primary focus of this solution was to make sure that the source code of all of those applications was stored with NCC Group. In the event of vendor failure, it could be released to the bank and they could continue to use, modify, and use the software. So what we said was, on the onset of the contract and on an annual basis, we are going to conduct what we call a two-phased verification of the source code. The first phase of the verification is a collaborative effort between NCC Group and the software supplier. Typically done on Teams, but it can be done in person as well. What we're looking to understand in that first phase is, what does the development environment comprise of? What are the operating systems? What are the third-party tools? What licenses have they purchased? And we're building up a shopping list of what will be required to actually build that source code. We then go through a full rebuild of the source code at the software owner's site. And we note down all the steps, we take screenshots, and we document the process which was required to take that human-readable source code through to the expected output files, whether they be binary, executable, Docker containers. Doesn't matter what it is, we're going to document it, and we're going to understand it. We then ask the software owner to demonstrate that that has been successful by asking them to place it into a testing environment. Now, we're not going to go through user acceptance testing, that's already been done. We just want to make sure that the functionality is there in the software on a high level, and it looks like what it's supposed to look like. It's not Tetris, for example. We then ask the software owner to archive and collect all of the files that we use during the verification process into a single place, like a zip file, for example, and transfer that over to NCC Group using our chain of custody software platform. The output of phase one of the verification is a document which tells the bank, this is the deposit that NCC Group currently have, and this is the steps that you would need to take in order to rebuild that software from scratch. And it shows the bank that all of the source code has been transferred to NCC Group. So what about phase 2? Well, phase 2 is proving it, because up until this point, the software owner's been in control. The software owner's done everything. Now, I'm not saying they're sneaky, but they could be. So what we do is we try to prove that a third party could build the source code outside of the software owner's control. We're going to simulate a release of the source code. In this case, NCC, Escode are going to create a virtual machine. Escode are going to install all the operating systems of third parties' requirements, and Escode are independently going to build the source code from scratch, thus proving that someone outside the software owner's house could build this software. We also produce documents in that case to say these are the steps we went through, because inevitably there are problems faced with taking a piece of software outside of the software owner's house. So we're going to make sure that the verification is completed successfully. We always work to what we call a successful outcome. So if there's a problem, we are going to contact the software vendor. We are going to say, hey, we've had this problem. They say, yeah, we fixed this. You add this file, delete this, whatever. And then we get the source code built successfully. As I say, the end point of that is another document we produce to say, these are the outputs. I mentioned earlier on that the software is under continuous development. So what we're also going to do is we're going to integrate with their Git repository and take source code deposits automatically every single day. So that whilst we might not be taking the most recent verified version of software, we at least have a copy of more up-to-date source code available to the bank in the event of a release. All of that is underpinned by a legal contract. We call it a single license agreement or a tri-party agreement, a three-party agreement, but basically it is a piece of paper which documents the roles and responsibilities of the software owner, the bank, and NCC group. That's it.
So I think the two outputs here for us was with the bank, that once we completed that process on the initial deposit and then on the core, where we've taken the deposit, we compiled it independently, we sent the binaries, the outputs to the bank for testing. The reports that demonstrates the processes, the steps that you need to go through, were then used internally with their internal audits to demonstrate that they've covered all of the eventualities, that actually, that source code deposit has been rebuilt independently of the software supplier outside of their development environment, so they can actually absorb, recover, and continue. For the actual relationship with the supplier, they proved that what they were depositing was good quality. That helped, that enabled a trustworthy relationship building forward between the bank and that software supplier, especially such a big project like this. And if we just go back to the slide before, it's so key to always have legal and compliance along this process with us, because if they're not along the process, and the decision to remove something out of the solution that we're designing and creating could have an impact later on. And whether is that for us or for the bank, is that going to meet their compliance elements on such an important application? So that just an insight into what we do and what we do for many of the companies that are here today. But we've got some future topics that we're aiming to bring. The next one is obviously not just source code.
So I've already given you an example or a case study of what we've done for the last 40 years with what we call traditional or on-premise pieces of software, typically where the licensee is in control of the assets that make up the application. But what about cloud applications? We talked a lot about that today, where the assets are actually held by the vendor. In the event that the vendor were to fail in this situation in the right-hand side, the customer has a much more immediate impact to their business ability to do business. So we've developed what we call Escrow as a service, which we're not going to go into loads of detail today, but it allows us to facilitate keeping the lights on, basically. So we're going to hold on to the materials that will allow this customer to rebuild a cloud environment from scratch, or we're going to take credentials which allow them to get into their original production environment. Lots of different ways we can assist there, but our Escrow as a service portfolio seeks to address the impact of, or the immediate impact of vendor failure.
Sure. And I think the second topic that we're going to bring to Banking 50 is DORA. We've been operating here for so many years, so many banks, so many fintechs, so many software owners, that DORA, we're quite current right now for DORA. It satisfies DORA in so many different ways and cost effective. So we're hoping to bring this discussion to the table on one of our next events. So I think that's it. And please, there is a QR code there. It is meant to be in green, not white. But any feedback would be really good. And any questions, please let us know.
Question, yes, Remke?
I do have a question because maybe I haven't read it correctly, but we have continuous development and we take a snapshot of the code. So how do you deal with that if there's continuous development and every 2 weeks new releases of the software?
It's a great question. Like any insurance policy, it is a balance. Now, we do have customers who verify very, very regularly with us, so up to every month and beyond. Costs more money though to do that with us because we have to go through that verification process 12 times per year rather than once. Now, if a customer says to us they want to verify the continuous version of the source code every single day, no problem for us, we'll do it. But it's up to the customer to decide what's their balance, how often do they want to verify that source code. We're going to take in every single copy of the source code each and every single day, but the customer can decide how often they want to verify it.
And that means that you would spin it up when you have a new release? Right?
Yeah, as often as we're asked.
I think one of the things that we do for many customers is we take continual deposits, don't we? So we set the GitHub repository and it just pulls on a frequency. But none of those deposits will be checked. We just point it in the right repository and it'll just pull. And then on meaningful releases, core releases, major changes, something that's meaningful, we might pull one deposit and attempt to build it, or we might do some stress testing on the deposit in a different way, as we've just described it. So it's all got software developers' time isn't to be spent on escrow just at the most relevant time, so they can fix on delivery. Other questions?
To what extent are the regulators driving this, and are they pushing banks to use solutions like you guys offer?
Yeah, I think the regulations in India now state escrow. We do have somebody, we've got a regulator individual that is in contact all the time. We've spoken to Finland before their recent update. I know that in the UK we've had, it doesn't specifically state escrow, but everything that it leads toward is testing the supply for insolvency. Right, so that could mean several different things. So the different tests will lead to the root of escrow. I think in Singapore, in mass, they're pretty close to naming escrow as part of the regulations. Yeah. But it just seems to be making more and more sense as we're going along because I think the Financial Services Authority in the UK during COVID stress tested 4,000 suppliers, and a high percentage of them wouldn't survive. So how was that going to leave the financial services sector if there is another COVID and the spending stops? The other interesting